Shri Gurubhyo Namaha. Today we are going to see accounts from incomplete records. In this topic itself you can understand the accounts are incompleted. It is not maintained properly. First, the maintenance of accounting records as per double entry system is compulsory for certain organization. First of all, what is double entry system? See, this double entry system is a systematic record of transaction. So, we have proper transaction, journal, ledger and then trial balance, trading and profit and loss account and then balance sheet we have. But in incomplete records, we are not at all maintaining all those things. Okay. So, for example, in India, companies must maintain accounting records under double entry system. It is compulsory. Okay. As per section 128 for 1 of the Indian Companies Act 2013. And then organization must maintain accounts only under double entry system. All the organization will compulsory follow the double entry system. But in incomplete records, the sole trader or a partnership will maintain. Okay. See, what is the meaning of incomplete records? When accounting records are not strictly maintained according to double entry system. In these incomplete records, they are not at all maintaining double entry system. They are following their own records. Okay. So, these records are called incomplete accounting records. So, you are not having a proper transaction, you are not getting any proper thing. Okay. And then accounts of customers and creditors are maintained fully and other accounts are not maintained based on necessity. So, what they will do no, in incomplete system, they will never follow all the accounts. We have in double entry system, we have personal, real and nominal accounts. They are not following here. They will follow only personal account and then cash account, not all the accounts. Okay. Features of incomplete records. See, what is the nature of the incomplete record? First, it is an unscientific and unsystematic way of recording transaction. They will not at all recording properly. For example, if they are purchasing a goods in the sense, immediately they will never write and keep. If they are selling the goods in the sense, they will immediately they will never write and keep. Whenever they are getting that memory, then only they will write and keep all those things. Okay. So, it is not accounting principles and accounting standards are not followed properly. In double entry system, we have a systematic record, I said no, that and all they will never follow here. Okay. And then type of accounts maintained. In generally, only cash and personal accounts are maintained fully. So, what are all the cash transactions they are doing here, they will maintain, and then personal accounts, debtors, creditors, that and all they will maintain here, but not all the transactions. And then real and nominal accounts are not maintained properly. They will never maintain real account in the sense tangible and intangible assets, that and all they will never maintain here. And then nominal account in the sense all the expenses, all the losses, all the incomes and gains they will never maintain here. And then it is not, it is sometimes they may partially they will omit, sometimes they may entered, they forgot to be entered. Okay. And then lack of uniformity. There is no uniformity in recording the transaction among different organizations. So, same way how their double entry system they are following, that one they will never follow. As such, what they are thinking they will write and keep, that is all. The different organization record their transaction according to their need and convenience. Whatever convenience they have, whatever need they have, they will write and keep, that is all. They will never maintain proper record. Okay. Before we are entering into incomplete records, we should understand the difference between the double entry system and the incomplete record. This incomplete record is otherwise known as single entry system. Okay. First, two aspects, debit and credit. So, in double entry system, they are following debit and credit aspects of all the transactions. But in incomplete records, debit and credit of all transactions are not recorded. They are, sometimes it may be partially, sometimes it may be omitted fully. And then personal, real and nominal accounts are maintained fully. So, they are the systematic record of transaction, that is why they are maintaining all the records. So, personal, real and nominal accounts they are maintaining here. But in incomplete record, personal and cash accounts are maintained fully, real and nominal accounts are not maintained. So, they will never maintain real and nominal accounts. And then this double entry system is suitable for all the organization. All the joint stock companies will follow this double entry system, but it may be suitable for small sized sole traders and partnership firm. They will only follow this records, not a joint stock company, because these details are not mentioned properly. And then accounting records are acceptable to all users, including tax authorities and financial institutions. All the government authorities will accept this double entry system only. They will never accept this incomplete record because it is not maintained properly. Accounting records may not be acceptable to all users. They will never use this. Okay. And then limitations of incomplete records. What is the limitation? Lack of proper maintenance of record. Already I said they will never maintain any records. It will not be maintained properly. So, it is an unscientific and unsystematic way of maintaining transactions. All the things are not maintained in a systematic manner. So, real and nominal accounts are maintained properly. So now they will never maintain the real accounts, tangible and intangible assets and all they will never maintain. And then difficulty in preparing trial balance. Why we are preparing trial balance in the sense, you can find out the arithmetical accuracy of the business concern. So, that is why we are preparing trial balance in the double entry system. But as accounts are not maintained properly for all the items, so the maintaining records are incomplete, hence it is difficult to prepare trial balance. You cannot prepare trial balance to check the arithmetical accuracy of the account. So, you cannot find out the pakka accuracy, you cannot find out. Okay. And then difficulty in ascertaining true profitability of the business. So, say how they will find out whether it is profit or loss. In a business organization, they will find out a trial balance. With the help of trial balance only, they will prepare trading and profit and loss account. This is unsystematic record of transaction, that is why they cannot prepare this profit and loss account. So, profit is found out based on the available information and estimates. So, accuracy will not be there. So, sometimes they will find out whether it is profit or loss. The concern is going profit or loss, they will find out. So, hence it is difficult to ascertain the true profit. They will never find out the true profit. Sometimes they may get as it will not be accuracy. Okay. And then as the trading and profit and loss account cannot be prepared with accuracy. So, they cannot prepare trading and profit and loss account. Okay. And then now we are going to enter into accounts from incomplete records. How we are going to prepare? Based on the available information only, we can prepare this account. Okay. So, based on the available information in the incomplete records and from memory, profit or loss may be calculated. So, sometimes they will keep it in the mind, memory. So, in that only they can prepare profit or loss. Okay. And then with available data, what are all the data they are having, sometimes they may write and keep something. So, that they can use available data, missing figures can be found out and the final accounts may be prepared. So, with the help of this only they can prepare final accounts. Okay. Yeah. Profit and loss from incomplete records through statement of affairs. So, in this method only we can find out the profit or loss of the company. So, under this method, by comparing the capital at the beginning, so So, the capital at the beginning and the end of the specified period, the profit or loss is found out. So, what they will do, no, they will compare with opening capital and the closing capital, they can find out profit or loss. Okay. Increase in capital is taken as profit. Sometimes the capital is increased, in the sense it is taken as a profit. Decrease in capital is regarded as loss. So, sometimes it may be decreased, in the sense they can consider it as loss. Statement of affairs is a statement showing a balance of assets and liabilities. So, the meaning of statement of affairs is it will shows the assets and liabilities, the balance of the asset and liability. Okay. So, statement of affair means it is a statement showing the balance of assets and liabilities. If capital equal to asset minus liabilities, you can easily find out the capital. If you are subtracting with assets and liability, you will be getting the capital. Okay. Calculation of profit and loss through statement of affairs. Already I said the statement of affairs is a statement, it shows the balance of asset and liability, I said. So, the difference between the closing capital and the opening capital is taken as profit or loss of the business. So, so the difference between the closing capital and the opening capital is taken as a profit or loss of the company. So, how can we find out this profit and loss of the company? First, we have to find out the adjusting capital. So, how do we find out this adjusting capital? First, you have to find out the closing capital, and then what are all the adjustment made during the year. For example, if we withdraw money from the capital, drawings, that is called as drawing. Sometimes we added some additional capital into the business. So, that is called as additional capital. So, that we have to calculate properly. Okay. So, adjusted closing capital equal to closing capital drawing minus additional capital. So, write down this, children, and then closing capital. How can we find out profit or loss? Okay. So, the closing capital plus drawing minus additional capital minus opening capital equal to profit or loss. If it shows a negative balance, it shows loss. If it is a positive balance, it shows profit. Okay. Write down, children. Tomorrow we will see the sum.